Stock market analysis and projections on the S&P 500. But first, I want you to read this important slide. This tells you about our analysis, how we approach our analysis in the markets, and what's important when you use our analysis for your own purposes, and always the importance of trade ownership. You must own your own trade and not look for anybody to help you get in or help you get out. Stock market analysis, S&P 500. We're going to look at cycle analysis in SPX and show you our projections in here and the changing things that have been going on. And I'm going to show you our proprietary level 4 studies and our market condition monitor. So market condition monitor is a fantastic app, and that's included in our level 4 membership, the premium version. You will see that. You just saw the announcement on our special we're running right now for level 4, and please do take advantage of that and get this MCM. So let's take a look now as we switch over to the charts. So this is the chart of the S&P 500, SPX. I'm going to show you first the weekly analysis in here. And you can see now that we're showing two different projections in here. Now, when you look at these two vertical dotted lines here, this gives you the time frame for the expected trough or bottom in the cycle. Let's just blow this out a little bit more, and you can see the cycle right here, and right here, and right here. And that those cycles in here are broken up into a dominant cycle of 28 weeks and a minor cycle of 14 weeks. And those are the average time frames in here for this particular symbol. Every symbol has its own cyclical periods. You want to learn more about cycle analysis, go to our workshop tab, and there's a free video in there, and you'll be able to begin to learn about cycle analysis. So let's go back to this cycle right over here. And we had expected that the decline would come over here into the time frame of late May to potentially early June. Now, with the market rallying as strong as it has, then that says to us that there's a pretty good likelihood that this low at worst will get tested and potentially the corrective period is over. Now that was a 5.9% loss. We expected it to fall down to the 23% right there, to the monthly 23% right there. That was a prediction of a very shallow correction. And I said that all along while we were looking for that it would likely be quite shallow and that you would not see what a lot of people look for is 10% or more in a correction. It's just not what we saw here. The reason for that was because of the duration of this advance. And you can see in here where the reversal scout was turned up here and was bullish and continued here, and then turned down over here and told us, well, that correction we were looking for was on. It only fell 5.9% and then gave you this big rebound. It's amazing how during this period of this bull market, which takes you way back over here to 2022, it's amazing how these V bottoms have come in here. And as soon as the decline was over, buying came in extremely aggressively. Now, I had talked about the fact that there were time periods where you had rallies right over here and here, and there was one more decline to come. This rally is stronger than any of those I talked about after that low, and now has gotten through what I'll show you is the 78.6 on the daily chart. Also, you see I put the slim ribbon in here for you to see, which never turned negative in here. It's been in a positive configuration the whole time. Reversal scout is more sensitive, and we tend to use that on our weekly charts because that gives us a good handle on the cycle periods. We can see that as it moves. So this low right over here that we see really looks like in the low that we were looking for. Now, some people would say, sure, Slim, you said it was coming out. The decline was going to come again. We were going to get to lower lows and it was going to come out into May. Well, that was the highest probability. But right now those probabilities are changing, and our analysis is probabilistic. We have quite mechanical ways that we look at that, and I'll show you that in just a moment. So now the projections which we had for June, July as periods of strength are the same. It just looks like it started earlier, though there is an opportunity for one more pullback in here. that we would expect. But now we see we have a test in here, and kind of the worst thing we think could happen if it fell through the end of May or the beginning of June, that it would be only a test of those lows and it would begin to go up again, or that low is in place and that rally is already going. Now, the upside projections are right over here at 53.95, so let's just say 5,400, and right over here around 55.30. Now, at 55.30, you will be at historic market cap to GDP percentage. It'll be 200% or just a little bit more. If it were to get up to that level, it would be very likely there would be a very severe downside reaction. Even at 5,400, where you're, let's say, 195% of GDP, you are at historic levels, and that tends to bring significant selling. And I think that there's a potential for this next rally into the summer to be the end of the bull market. Well, we will see as we get later on in the year, and there'll be levels that we will have that will give you that will be breakdown levels, that if the market does fail early, then we'll get some sense that it is the bull market is over with. And I have always believed in here that this was a secular bear market, or the formation of a secular bear market, but we were now in a cyclical bull market that I thought would last well into later into 2024 and potentially into 2025. So that's what we're looking for in here, a potential of another pullback. Now, let's go to the daily chart in here. This was the analysis that I had, which was that it would likely be getting up into this level and reverse and come down and get back down under this low, or even down to that 8% level on the downside right over there at 48.25 or so. That was the analysis as it was before you got through these levels here, which was the sell zone right there. So when that happens, we have a very mechanical way to react to that because it's important information. And you can see in here the slim ribbon PO, which did turn negative in here and brought you just the end of this sell-off in this choppy period there, has now turned positive again. So we're getting our indicators turning positive. Our market condition indicator has turned positive. Our option bias indicator has gone neutral from negative, and the slim ribbon and slim ribbon PO has now gone positive. These are positive indications. And when you get that and you move through the repair level, which in this case was 52.01, then we have to revise things because it's giving us a more bullish indication. This is what that looks like right now, based on all of the new information that we have. And that is that the downside pressure that was coming from the weekly chart. Now let me just go back to the weekly chart. That was this right over here as it was correcting, that is dissipating. This is starting to curl up. And the fact that you could get up through that 78.6% tells us that that pressure from the correction from the longer time frames is now disappearing. It's dissipating, or else you couldn't get up to this level. You would have had another cycle like this. But now it tells us that the upside movement in here, the magnitude of this, and now the duration of this advance makes it likely that while you're probably going to get some correction in here, it's not likely to get back down to this low. So this area over here becomes a buy pending area for that period into the summer, that next period of rally, which starts really out in June once this pullback comes. So it would look something like this, where this rally would then turn up somewhere in there and make that trough in there. We put in this, we call it like a slim cloud, because we have an upper and lower channels that we put in there, and then it essentially is dynamic. It moves as the market tells us to move it, because we want to get the best understanding of market conditions and the highest probabilities. So while the market was down over here, the highest probability was that it would, play around in here and then move down again. Once it moves up through the 61.8 and closes over the 78.6, we remove the sell zone because it's no longer a high probability, though it's pretty likely that there will be some correction going in here, and that offering a buying opportunity. So hence that says buy pending right over there. This dominant cycle, which now is grayed out, is because it's losing its influence that we have in there. While it still likely is going to bring some pullback into this area, that support zone right now is 5106 to 5047. If it was to get under 5047, then it would probably get down and test that low that we expect that we expected before, but now is less likely. So again, support levels right over here is the 5103 to 5047 area, and this is really where I think the highest probability is. If we get a pullback, it will offer a decent buying opportunity for that next move to the upside. Again, looking at the side by side, this corrective period that we had right over here now looks over. We need more information to come to us to be sure. One would be the reversal scout turning positive on the weekly. Then I would know for sure that the downside pressure from the longer time frames had dissipated, or finishing this cycle in a positive configuration where it ends above this level right over here. That would then tell me also that the pressures had gone from corrective to where the buyers really are in command. Not quite enough information for that right now, but things are changing. We expected that the summer would be a period of strength. This bottom came a little sooner than we expected, though pretty much in the range of the magnitude of decline that we did expect. So that is a look at the S&P 500, and again, looking for a rally in the summer up to the 5400 to 5535 area, and once it gets into that area, it will be in a period of extreme risk based on valuations. Not that it isn't already when it's trading around 187% of GDP right now. So it's already super overvalued. And to call for an extension of the bull market right now that is only going to be a couple hundred more points is really not looking for a large percentage gain here. Though I do think it will be with an upside bias. Let's take a look here as we look at our market condition monitor in here. This again is included with our level 4 membership, and you can get that for only $99 non-recurring in our new special that we're running right now. Everything that we have will be available to you. So let's take a look down over here as we look at the trader. There's a trader or a time frame version in here, and I have it set to short term, but you could look at intermediate, near term, intraday. All of that is our built-in algorithms on here that really help you understand the conditions of the market. So I'm looking again at the trader version, and let's say I'm a short-term trader. So that would be, I'm looking at a lot of things that, in the daily and 2-hour time frames or 1-hour time frames. That would be really what fits. And you can see in here that this is May 10th. So the beginning of the week, this had turned from neutral to bullish. Same thing over here, neutral to bullish. This that's the S&P and the QQQ. The IWM turned bullish back on 5/3, so that was more than a week ago. And the same thing here for the diamonds on 5/6. So this turned bullish. If I look at the intermediate patterns right over here, you will see that in the intermediate, these are all turning now to slightly bullish from what was bearish. And that's telling you the conditions, how they're changing. And that's another reason, looking at our algorithms in here that are made up of our proprietary indicators, that this is a good reason to believe that if the market were to pull back in this time period we're looking for over these next couple weeks, that it probably would not be able to go down that far. So you can see that if you were if you were an intraday trader, you could just set this to intraday, and you would be looking at down to 3 minutes, and you can see in here that the IWM intraday today is the most bearish. This is in line with our day trader app, which is our day trader service, which is unbelievable, showing right now that the weakest index for the day in here is the IWM. So if you were what we call a near-term trader, which would be kind of an intraday swing trader or a couple-day holding period in there, it would show you in here the changes. And you can see the mixed market in here now. IWM is still pretty bullish. If you wanted to look at the time frames in here, you could look at it right here, and you can see the SPY and the DIA. Looking at that on the 2 hours right there, or you could look at any of these time frames right there. Pretty amazing. Let's just look at the daily, and you'll see the dailies, even though the market's pulling back right now, intraday, these are all still bullish. So if I look at the 2 hour in here, these are basically mostly bullish, though the reversal scout, which is more sensitive, is showing you the QQQ, and the IWM is the weakest of those indexes there. So let's go back to the trader version. Let's look at short term, and let's just look at the trade setup conditions, and we'll just look at the best and worst in here. You can see in here that what the best 5 or so are TMAS Silver, China, Silver, PAAS, FCX, Copper. You can see the things that they're buying in here are not really the most bullish, but let's look at are not the most widely held. And money is moving into the metals, as you can see right over there. Let's just scroll down a little further at everything that is very bullish, and you can see that copper, Amazon, GDX, CVX, Newmont, PPLT, XLP. Wow, that's very bullish. Italy, Amgen. Look at all the things that are very bullish in here. Costco. These are all short-term. Morgan Stanley, EMU, very bullish, and Goldman Sachs, XLU, which has been fantastic. And I'll give you a little warning about XLU, and that is when historically when XLU gets extremely strong and it's up like 6% for the month, that is a precursor to some weakness in the market, because it says that money is moving into more defensive areas. So we're just going to keep our eye on that, because we're basically saying we still has time for the market to go up, and this isn't a timing indicator. It's just a little sentiment indicator that says, watch out, there may be a message in there. Go back and look to where XLU surged before some of the big market breaks, and you'll see what I'm talking about. So these are the very bullish. Let's just see the ones that are bearish, very bearish. You can see Shopify is very bearish, and there's not much very bearish now because the market got strong, but there are a lot that are in the bearish category that you can see right there, and that's it. I'll stop right there. And those are the ones that are bearish, and one very bearish. This is an amazing application in here. I just love this. And you can, do the same thing for intermediate term or for any of the time frames in here. So I love this intermediate term. I was saying yesterday when I was on Tasty Trade that Starbucks was one that I thought was very bearish on the cyclical patterns, and you can see it showing up that way here. Also intermediate, because it's a really super weak stock. So I wanted to show you that. That's a look at the MCM. This is a look at the S&P 500, which we believe some modest pullback probably over the next couple of weeks, and then getting ready for probably a stronger June and July. If it sets up anything different than that, of course, we will be on it and watching it and letting you know, because everything we do is about watching the market, finding the things that are the highest probabilities, and sharing our analysis and education with you, because your success is our success. So that is it on the look at the S&P 500, the stock market for this week. Don't forget, you can take advantage of this amazing special. We have only done this once before, some years ago, where you can get everything basically we have, level 4, level 3, level 2, level 1. You sign up for the level 4. It's non-recurring, only $99, and you will get all of our analysis, everything that you see on here, our MCM, premium, and everything that's in level 3, 2, and 1. Go to the askSlim.com website, click the Learn More button, and you can then get this non-recurring level 4 membership for only $99. And if you need more information, write to Matt at askSlim.com.